You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, and it's a lot of things. See, it's the Ides of March. It's Triple Witching Day, and it's Friday, right? That's enough, but wait, there's more. So anyway, happy Friday. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. Now, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Unlike the first broadcast of the day, which is private. The first broadcast is our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you haven't yet taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, it says 5-day free trial, no credit card required. All you got to do is click that link. It'll take you to a registration form. Now, this is an automated process, so it's really important that you fill out the form properly. Otherwise, we'll never see it. We won't know that you want to take the free trial, and you'll be grumpy. So, take a second, fill it out properly, and in most cases, same day. That means today. We'll get your desktop set up. We'll get your indicators indicating. Then you'll have the weekend to get familiar with the indicators. You know, some markets never sleep. And then Monday will actually begin your free trial. So you'll have all next week, Monday through Friday, 5 consecutive trading days. Now, if you're listening to this broadcast after the fact, maybe a year into the future, or a month, or a week, it doesn't really matter what day of the week or weekend that you sign up for the trial. You'll always get 5 consecutive trading days, even if it stretches over a weekend. Now, you're only allowed 1 free trial every 6 months with a lifetime cap of 2. Now, yes, when you sign up for the trial, we have your IP address, and we're just asking, please don't make it awkward for us or you. Okay? All right. Now, when you take the free trial, you're not only getting access to the live training room, you're getting access to every resource that our passport holders have access to. With one exception, the Thursday night members only workshop. Good news is when you do become a passport holder, you'll receive the golden key that unlocks all the private Telegram channels, including the weekly trading, or including the weekly members only workshop channel. So not only can you watch last night's workshop, but the week before, and the week before, and the week before, going back years. Okay? Again, when you take the trial, you're going to have access to everything: the weekly trading zones, the Logic 247 alerts, the concierge trade alerts, one-on-one mentoring, Be able to use the indicators. We'll teach you the strategy. And then, at the end of your 5-day trial, you'll be able to make a well-informed, intelligent decision whether or not trading is right for you before you have to spend a dime. That's right, everything I just explained comes with no credit card required. Now, when the live trading room ends each day, we take a 30-minute break, and we come back for this broadcast, the afternoon broadcast, which is simulcast across our platform and our YouTube channel. So there's 2 different ways you can join this afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com, scroll down the page a little bit, you'll see where it says afternoon broadcast. Click that link, complete that 30-second registration form, and you're done. What will happen is going forward every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, there's going to be days you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy and can't join live, but do want to get caught up later. You can do that too. I am talking about our YouTube channel, which is very easy to remember. youtube.com/CFRN. You already know the YouTube part, so really you only have to remember CFRN. Christian Financial Radio Network. There it is. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but really how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, a year, 3 years, even more. Just pick some days at random. Doesn't matter which ones. Listen in a little bit, fast forward a little bit, go grab another day, do the same thing. What you'll discover is the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. We'll open today with our daily devotional and a word of prayer. Now, we just finished a series yesterday, giving it all away and getting it all back again. Today, we start a new series, Goliath Must Fall, winning the battle against your giants. Now, we all know about the Goliath in the Bible. That was David's giant. But we all have giants in our life. Our scripture today is 1 Peter 5, verses 8 through 11. And I'm going to share with you from the Message translation. Keep a cool head. Stay alert. The devil is poised to pounce and would like nothing better than to catch you napping. Keep your guard up. You're not the only ones plunged into these hard times. It's the same with Christians all over the world. So keep a firm grip on the faith. The suffering won't last forever. It won't be long before this generous God, who has great plans for us in Christ, eternal and glorious plans they are, will have you put together and on your feet for good. He gets the last word. Yes, he does. Again, that's 1 Peter chapter 5, verses 8 through 11. Now, we're all familiar from Sunday school class, except for those who didn't grow up in a home where you were mandated to go to church. The epic tale of David and Goliath. It's probably one of the most well-known stories in the Bible. On one side of the valley of Elah stands the Philistine army with their 9-foot-tall champion named Goliath. Wonder how much those sneakers would sell for. Just saying. What would they call him? Air Goliath? I don't know. I hadn't invented basketball then, so. On the other side of the valley stands the Israelite army, cowering in fear under the leadership of their king named Saul. For 40 days, Goliath has been taunting the Israelites and holding them in the grip of fear. Day after day, he has been challenging them to send out one soldier to face him man to man. That's pretty easy to do when you're 9 feet tall, right? But so far, nobody has volunteered. Perhaps you can relate to the plight of the Israelites, because some kind of giant is standing before you right now, taunting you, harassing you, and insulting you. Maybe it's fear. Maybe it's anger. Maybe it's a feeling of rejection. Maybe it's the sneaky but all too familiar giant of comfort that compels you to live for something lesser. That's a sneaky one. Might even be an addiction. Whatever this giant is in your life, day after day, it has been robbing you of power. You've tried to stop the taunts, but you feel immobilized, held back, paralyzed from moving forward. Ultimately, you know you're not living the fullness and freedom of life that God intends for you. The good news is that God has made a way for these giants to fall. It starts with believing that even though the giant you're battling might be big, it's not bigger than Jesus. In fact, he has already defeated the giants in your life. When he came to this earth, he endured hell for you on the cross and rose from the grave so you could shake off the prospect of a doomed life. He came to set you free from the giants who rise up against you and hold you paralyzed in fear. Jesus has already overcome the enemy. However, as we read in 1 Peter 5:8, the devil still prowls around looking for someone to devour. In many ways, He is like a snake with its head cut off. When you kill a snake, you have to be sure to bury its head, because even after death, the serpent holds a lethal dose of venom in its fangs. If you step on a dead snake's head, you can still get poisoned. In the same way, even though Jesus broke the power of Satan at the cross, he can still inject his deadly poison into our lives. He is dead, but still deadly. Goal, then, as we will discuss over the coming week, is number one, don't step on the snake's head. In practical terms, this means resisting the enemy, equipping ourselves with the defenses Jesus has provided, and leaning into his sufficiency. It means remembering that he is your David in the story, and you can never bring down giants through your own courage, willpower, or efforts. It's always Jesus who brings the giant down. If you truly want to see victory over the giants in your life, whatever they are, you need to understand your dependency on the all-sufficiency of Jesus Christ. Victory is all about trusting in Christ and not about trying to succeed. To take the first step against your dead but still deadly enemy, you've got to make this paradigm shift in your mind. Christ is the only force that brings about true change. Some thoughts to ponder. How do you respond to the notion that Jesus, not you, is the David who has defeated the giant in your life? What are the implications of this for the way you live your life? Jesus came to earth to crush the power of sin and death, and he has already overcome the enemy. What difference does this make as to how you view the giant in your life, the one that you're facing right now? What are some ways you go about drawing close to Jesus so you won't step on the venomous head of your already defeated enemy? We'll talk about these things and more over the coming. Join me in a word of prayer. Heavenly Father, as we gather in your presence, we're mindful of the words of Peter urging us to be alert and sober-minded, because our adversary prowls around like a roaring lion, seeking someone to devour. Yet we take comfort in knowing that you, Lord, are our strength and protector. Grant us, Lord, the discernment to recognize the schemes of the enemy and the courage to resist him, standing firm in our faith. Help us to be steadfast and immovable, knowing that you are with us, strengthening us, upholding us with your righteous right hand. Fill us, Lord, with your peace that surpasses all understanding, guarding our hearts and minds in Christ Jesus. May we cast all our anxieties on you, knowing that you care for us and will sustain us through every trial and temptation. Lord, we humbly submit ourselves to your mighty hand, trusting that after we have suffered a little while, you will restore, confirm, strengthen, and establish us. To you be the glory and dominion forever and ever. It's in Jesus' name, believe and pray. And everybody said, amen. Amen. And happy Friday again. Hey, there's a movie. It's not a new movie, but it's an interesting movie. Most of you have probably heard of Oral Roberts, and you probably all have some very mixed thoughts and emotions, those of you that know who he is. Well, a long, long time ago, he took a young black preacher under his wing, and the story that unfolds from there, I don't want to spoil any of it for you, but I will give you the name of the movie, Come Church. C-O-M-E, Church. It's on Netflix right now. The movie was actually produced by This American Life, which most of you know is one of my favorite podcasts. Does it lean left more often than I would like? Yeah. And are there certain episodes that after 5 minutes I decide I don't want to listen to this? Yes. But are there some episodes that are some of the best stories that I've ever heard? Again, yes. So, Come Church. When you have time, check it out on Netflix. Tells the story of this young pastor who, while reading his Bible one day, had a revelation very different than mainstream Christianity. Now, in no way am I recommending that you should believe what this pastor believes, but it will help you understand why some people think the way they think. I think the movie's only like an hour, 20 minutes, maybe an hour and a half. It'll give you some great food for thought. All right, off to the markets. I'm going to give you the numbers from around the world, starting here in the U.S., cash markets, or the indices as they're called. Then we'll go to the charts. Then about 12:45, 12:50, Michael will join us and give us a recap of what happened in the live training room. Then we'll go live on the TradingView platform for about 30 minutes. And then we'll wrap things up with the remainder of the alert recap and our good word for the day. All right, here we go. Starting here in the U.S. Oh, and let me add, I said it before. In fact, let me just share this whole thing with you. Wall Street traders are bracing for a quarterly episode, ominously known as triple witching, in which derivatives contracts tied to stocks, index options, and futures are scheduled to mature, compelling traders en masse to roll over their existing positions or to start new ones. About 5.3 trillion are set to expire this time, according to Rocky Fishman, founder of derivatives analytical firm ASM 500. It's a day in which the direction of the market is very, very difficult to predict. I don't think so, because we talked about it yesterday. We've been talking about it all week. That comment came from Matt Malley at Miller Tabak. He says the internals get so skewed by the expiration that they don't tell us anything. It will be important that investors don't use today's action when trying to decipher what is going to happen in the marketplace next week and beyond. The options episode comes at a critical juncture for markets positioning for next week's FOMC meeting. A recent pickup in inflation isn't likely to shift officials' forecast for 3 interest rate cuts this year and 4 in 2025, according to economists surveyed by Bloomberg News. The S&P 500 at the time this article was published had dropped to around 5130, with trading volume that was 40% above the 30-day average. NASDAQ fell about 1%. Adobe tumbled on weak sales. Nvidia Corp whipsawed while heading toward its 10th straight weekly advance. 10-year Treasury yields topped 4.3%, extending this week's increase to almost 25 basis points. This week has been remarkably confusing on multiple fronts, according to Florian Lelpo at Lombard Asset Management. The macroeconomic news flow has made it clear that the U.S. economy is unexpectedly slowing down, while inflation is decelerating at a slower pace. Instead of focusing on the economic slowdown, markets have fully embraced the inflation narrative. A rally in equity markets could falter if sticky inflation prompts the Fed to turn more hawkish next week and signal fewer than expected rate cuts. That's from Barclays. With the Fed so far endorsing current market pricing of 3 cuts starting in June, investors continue to see the glass half full on the soft landing narrative. Yeah, give that some serious thought. But I'll show you what we've been talking about all week here in just a minute. First, let me share with you Logic 247. It's our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, it's also crude and gold and silver, the euro and bonds. We're in week 293. Over the last 293 weeks, we've issued over 16,200 individual handcrafted alerts. And we've averaged 20% or less being stopped out based on market structure and a very simple process that we teach all of our passport holders. This recap was done this morning at 6:30 a.m. Eastern. Since then, a few things have changed. At that time, we had 47 total alerts issued. We were still waiting on 15. 4 of those have changed to the positive, and some additional alerts have been added. Just 1 or 2. So where we stood this morning at 6:30 a.m. Eastern when Valerie did this recap, we had 34 actionable alerts, of which 5 or 14% have been stopped out, again based on market structure, and that simple process we teach all of our passport holders. So all in all, not a bad week. Now, the logic alerts come with an initial entry price, whether it's long or short, and then an initial target designed to help you get your goal for the day. Then there will often be a second, a third, a fourth, a fifth target, sometimes even more. That comes from me looking left for you to spot potential obstacles to the trade. If it's a short alert, the final trade to target will be the weekly zone below. If it's a long alert, the final trade to target will be the weekly zone above. Back. So I haven't done this week. I'm not going to go through the whole list and the whole week, but I'll just give you an idea in case you're new what it looks like. All right. So in week 293, as I said, last week, week 292, we had a total of 42 alerts, 4 never triggered, 38 actionable, 4 stopped out, 11%. Okay, 11% stopped out. Remember, over 293 weeks, we've averaged on a weekly basis 20% or less of the 16,200 plus alerts being stopped out. This was Sunday night. We opened for business Sunday night at 6 p.m. Eastern. If you come from the world of stocks, you think of the new week as starting Monday morning at 9:30 a.m. Eastern. The world of futures, Globex markets open Sunday night, 6 p.m. Eastern. That's the beginning of the Monday session. So Monday afternoon at 5 p.m. Eastern, the markets then go quiet for an hour, and at 6 p.m. Eastern Monday night, that's the beginning of the Tuesday session. Today's the Friday session, but it began last night, Thursday night, at 6 p.m. Eastern here in the U.S. So the first alert of the week was a short on the ES. We had 2 stop outs back to back. You remember on Monday we were sitting at 33%. Stop down. Go back and look at these again. Okay. When you find a sleeping alert, one with the Z's that didn't trigger, keep an eye on it because eventually it will. Could be weeks, could be months, but it will. And ones that are stopped out, keep an eye on it. Because if price came very close to completing that, it's going to come back and it's going to do it again. Here we had a short on the NQ. We had a short on crude oil. Still waiting on that gold. And we had a long on silver. That all happened Sunday night. And as we roll into Monday, we got a still waiting. Long on the Dow. Long on crude. Still waiting. Long on the ES. Short on silver. Short on gold. Now you'll notice that you've got entry price. B means buy. S means sell. T is your initial target. Then as I look left and see a previous swing low that could become, or a previous swing high on a long, that could become potential resistance, that becomes your next target. Initial target gives you your goal for the day. Second target, final trade to target. So I'm not going to go through each one of these. At the end of the week, all of this information becomes a matter of public record. During the week, it's only available to members and trial members. Okay? So Valerie will have a lot of catching up to do this afternoon when she does recap for the week. Wraps it up. Long before we had Logic 247, we had what were called concierge trade alerts. That was our original alert service. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., as opportunity presents. Futures trade around the clock, and we have traders around the globe. But the CTAs They're posted as a static report shortly after the Globex opened. Last night, 10 minutes after the open. So in other words, all of our members and this week's straw members had all of these targets 10 minutes after the market opened. Now, our goal is for you to become self-sufficient. If your goal is to trade for a living, then your goal has to be to become self-sufficient. Because you're never going to become a consistently profitable trader as long as you're waiting on somebody else to tell you when to get in, when to get out. Our whole purpose is to teach you how to trade. Not just a specific instrument, futures, stocks, crypto, Forex, ETF, but how to trade. Once you understand that price flows the same across all markets and all time frames, and you learn how to trade, you can trade anything, anywhere, anytime. That's our goal for you. Hopefully our goals align. Now with the logic alerts, I give you the entry price, initial target, and multiple targets as you saw. CTAs, I give you two things. Long target and a short target. Okay? For all the same markets. First thing you do when this report comes out is go to the 30-minute chart of whatever markets you trade. Make a note of where price is at the time the report came out. Once you make that note on your 30-minute chart, then go ahead and draw a line in the sand at the long target, line in the sand at the short target. Those will help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is the green line you'll see on my charts. Stands for bull, bear, cross. No matter what time frame you're looking at, if price crosses above the green line, then we're bullish and anticipate higher prices. Price crosses below the green line, we're bearish and anticipate lower prices relative to the time frame we're looking at. Whether it's a daily chart or a 1-minute chart, a tick chart, a range chart, weekly, monthly, and everything in between. Now, the logic alerts, I look left for you, but with the CTAs, you're stepping up your game. You're learning to look left yourself to spot potential obstacles to the move. And you start learning how price behaves at a weekly trading zone. That is really important because price is always trying to reach a weekly zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zone since December 14th of 2009 every single week. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. Only 3 things happen at a weekly zone. When price encounters a zone, 70% of the time, you're going to get consolidation. 20% of the time, you're going to get rejection. 10% of the time, the slice. And of course, I am referring to the 30-minute chart, the roadmap, where we find our windows of opportunity so that we're prepared when price gets there to execute the trade with everything we learn in the live training room every trading day with surgical precision. just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, because this broadcast is open to the public, unless you're a member or trial member, you did not get these numbers last night, 10 minutes after the open. Feel free to take a screenshot, or if you're watching after the fact, just hit the pause button, jot down the numbers that would be important to you, because before this broadcast ends, we will walk through each and every one of these individual markets. Let's go to the daily chart of the S&P. My. Is this not what we talked about yesterday? If you missed yesterday's broadcast, you can always go listen to it at youtube.com/CFRN. We also talked about the same thing Wednesday, Tuesday, Monday, and last Friday, when we put in the new all-time historic high. And I talked about a potential head and shoulders, and last night in the workshop, I called it Picasso head and shoulders. Got this low left shoulder here and this high right shoulder here, and I'm sure some technical purists would say that invalidates the whole thing. Whatever. The economists have all these rules. The internals are this and the internals are that. Here's what we know. Here's the BBC. We know that price always reverts to the mean. You can see it. And the pullback holds more often than not. Last time we touched the BBC was February 21st. Are we due? Yep. Where did we say we would most likely find support? Initially at the 62% fib extension. That's what we're setting on right now. Now the low of March 11th lines right up with the daily BBC. That's usually good for a nice bounce, okay? As you can see, over and over. Now the last time price traded through the BBC was November 2nd of last year. We had been in a downtrend for some time. November 2nd, we closed above the BBC. That's the heads up. And then confirmation came the following day on the 3rd when we opened and closed above the BBC. And since then, we've been on a tear. Now, markets rarely move in a straight line. You get legs and a retracement, a leg 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 and a retracement. See, we failed to put in a higher high here. We talked about that in depth yesterday. Big sign of weakness, okay? And we almost made it down to the 62, but we closed right above the step line. But since the markets opened last night, you can clearly see what's happened. Now, remember today's triple witching, and what was the dollar value I said that was involved in the expiration today? 5.3 trillion. Okay. Now, triple witching again is when derivative contracts tied to stocks, index options, and futures are scheduled to mature. You probably got a pop-up on your trading platform this morning that the previous futures contract, the H contract, would no longer be tradable after today. So you either get out or they'll get you out. Or you can roll forward to the new contract if you're holding long term. Primarily we're trading intraday and intranight because we do trade the overnight session. So everything that we've talked about going back to last Friday, while this day was kind of a surprise, but this was the real tell yesterday when we see the high, the all-time historic high, 52.57 and a quarter. Yesterday, we only made it to 53 and a half. 57 and a quarter, 53 and a half. And I said, and you can go back and listen if you missed it, the logical thing is for price to come down to the 62% fib extension, which was resistance on the way up, but support on the way down. Here, here. Would this be possibly a time when price trades through the BBC, as it did back on November 2nd? I think it would be. I'm not forecasting that it will. I'm making an observation. Now, the fib extensions are these short lines. The long lines are the fib retracements that embrace the entire leg up, which began, or the low was put in October 27th. The high was put in last Friday, March 8th. And here we are 7 days later, about to touch the BBC. A big question, will it hold? Now, the reason we're looking at a daily chart is because institutional traders, the ones who actually move price because of the account size they have and the size they trade in, they look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it all has to do with account size. They can stay in a profitable position far longer than you and I are comfortable with, and they can withstand a drawdown far deeper than you and I might ever dream of. So no matter what you trade, maybe it's a different futures market, maybe it's individual stocks, crypto, Forex, ETF, if you'll teach yourself to just spend 2 minutes with the daily chart before you begin your trading session, you'll have a pretty good idea which way the wind is blowing. Our strategy and indicators are not designed to outsmart the institutions with their infinite resources, but to help you see and understand what they're doing and why, so that you can do the same thing long enough to get your goal for the day. And then have the discipline to put the mouse away. Now, Michael should be here any minute.
I am.
Oh, you are.
I am here. I am.
You crept in on little cat feet. I didn't hear you.
Yeah, that's what I have.
So, guys, this is what we've been talking about all week since this high was put in last Friday. This is that Picasso head and shoulders. All right, we're coming down. The neckline for me is below the BBC. I think we've had 1, 2, 3, 4, 5. This will be the 6th retracement. Eventually, it's going to trade through like it did way back on November 2nd. Will this be the time? I don't have crystal balls. We'll have to wait and see. Keep in mind, triple witching and FOMC next Wednesday. Michael, if you're ready.
I am ready. We do.
5.3 trillion in derivatives will expire today. Now, you've probably heard that 80% of options expire worthless. I won't even argue that point because I don't trade options. But options are not futures. Futures don't expire worthless. But that's a long discussion, and I don't want to take up Michael's time. So, Michael, go ahead.
Okay.
Screen looks good.
Here we go. Good. Good afternoon, everyone. Today is Friday, the 15th day of June, 15th day of March, 2024. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here on the home page. There is no credit card required for the trial. Click on that, and it's going to bring you to this page. It's the registration page. Now, this is all set for next week now. Get in there and click on that and fill out this form. All right. First name, last name, email, phone number. Down here at the bottom, if you have Ninja, give us your machine ID. If you have TradingView, give us your TradingView login ID or username, and we'll set you up. All right. Now, results from the morning session. We had a pretty good session this morning. It took me a little while. Actually, not that long, but it took me a few trades because I stopped out on a couple. It wasn't actually that, well, 26 minutes, I guess. It was a little while. It took me a little while to get the goal for the day today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we made 27 ticks on the NQ, 24 ticks on the Russell, 10 ticks on crude, and 8 ticks on the ES. That put us at plus 455 on the morning session. Today, it took 26 minutes and 8 trades to get to the goal for the day. At that point, we're up $1,500, and we took a total of 26 trades so far today. On the month now, we're at $4,462, averaging $405 per contract per morning session. On the year, we're at $19,870. That is with one contract, right? Over 52 days, we're averaging $382 per day with one contract. Now, in here, this is what would happen if you were doing the 24/20 blueprint. If you started with me last year in January and did everything just like I did all year long, you would have started this year with 13 contracts, going to 14 in February, 15 now in March, and going to 16 next month. We have to get this over 30,000, quitting when we get the goal for the day. I don't think we're going to have any trouble doing that. We still have 14 days left. No, 10 business days left. We have 10 business days left. We're only 11 days in, and we're already 2/3 of the way there. I don't think we'll have any problem doing that. If you were to quit trading when you get your goal for the day, whether you had 1 contract, 10 contracts, 50 contracts, so far this year, doing everything like I did, you would have only had to work 20.85 hours trading. Right? Now, because I started out with 13 contracts and upped it 1 contract per month, so far this year, I'm averaging $4,892 per hour, quitting when I get the goal for the day this year. Last year, we ended with an average of like $2,000, $2,413 per hour. Okay, but we started with 1 contract last year. That is the 24/20 blueprint. We are getting there. We are getting there. We're 3/4 of the way through it. All right. Now, let's get into the actual trades. Okay. You see I have some alerts triggering here. These are alerts that I set this morning, like this BMEA alert that I set this morning, the NQ alerts that I set this morning, the JBL, the Tesla, the Ulta, all these alerts that I set this morning. You can see them right up in here. And there's one other one that I set this morning that I don't see in here right now, the MNIA one. This one. It's possible long soon right there on that one. MINM. I'll get into that in a few minutes. Let's get into the trades that we took. All right, on the crude oil today, I'll minimize this. You don't have to look at it. On the crude oil today, we had 2 trades. We had a break even here and a plus 10 on that one. Those were our 2 trades on the crude. Since the break, we didn't have any more during the break, so the crude was pretty good. The Russell, we had quite a few trades on the Russell. We had most of the trades on the NQ, but we did have quite a few trades on the Russell too. So we had a break even there. A plus something there. I think that was a plus 10. That was a break even again. A stop out. And I'm going backwards here. Okay, so we'll start here. We started out with a minus 10 right there, and then we had a break even, and then we had, that was actually a plus 22 to get us to 12. And somewhere we had another plus 2, and we had a plus 10. I don't know where the plus 2 came in. It might have been right there. That might have been the plus 2, and we had a plus 10 toward the end right there. That got us up to 24, and that's where we ended it. For the morning session, there was one more blue arrow right there during the break, and one more really profitable blue arrow during the break. Okay, again, if you only learn one thing, learn the blue arrows, and you'll be okay. Right. On the ES, we had just a couple of trades there. We had a 4-tick there, and another 4-tick. Now, I'm not sure that the other 4-tick was right here, but I have 4 ticks written down, so I know it was in there somewhere. During the break, we had just one blue arrow right here, and that would have been a break even probably for me. As it got 7 or 8 ticks into profit right here, I would have bumped myself to break even and it came back up. Not much else going on with that. Now, I want to look at something else here when I'm done with this. And well, I'll look at it when I get into the live stream here in a few minutes. I will show you all of that. in a few minutes. Now, let me go all the way back to the beginning here. All the way back to the beginning time today. Okay. There. Hang on. We got a lot of trades here on the NQ today, so we got to get back to the beginning where we started it all off. Here we go. The NQ. Now my charts were kind of weird this morning. The weather was really bad. You know, I have satellite internet, so everything was kind of acting slow this morning when I first started out. Weather's gone now. Everything's clear. Everything seems to be working faster again. Anyway, we got a break even there, and finally on this trade here, we got 12 ticks in profit. The next one over here, we got 4 ticks in profit to put us to plus 16. Then we had another 4 ticks in profit right there to get us to 20. Then got really sideways in there. And we didn't get anything there. Went from 20 to 50, so I had 30 ticks in profit on that one. And then the next one, we went from 50 to 51. I only had 1 tick in profit on that. I think I had another really small win somewhere. I did have another really small one that I didn't write down. It was 2 ticks. I went from 51 to 53, and then we stopped out to the tick on this one. We stopped out, and it went down to 33, and then I stopped out again. Right here, I should have my stop at break even on that one, and I went down to 13. And then I had a small win, went up to 17, and a little bit bigger win, went up to 37. Oh, 37. Sorry, 37. Then went from 37 to 67 on this one. And then we stopped out again down to 47. We had, I didn't put this win in right here. That was probably a 30-tick win. I didn't put it in, but I did put this in the stop out. So from 47 down to 27 right there. And that's what I ended with. I didn't count that one. I'm pretty sure that was a 30-tick win, but it is what it is. I won't put it in now. Right here, I wouldn't have taken this blue arrow right here. The outer band's completely flat. I know in hindsight, it looks like it worked out great, but I wouldn't have taken that. I would have taken this and it would have stopped me out. So I would have missed that great trade and I would have stopped out on that one if I were doing it. But I was not, right? And this one right here would have been another stop out, it looks like. So again, you go back to the, if you get your goal for the day, once you get your goal for the day, particularly on a Friday, just give it up and stop trading. Right here, you can see 2 more blue arrows right here would have gotten back both of those and then some, because one of these blue arrows gets back 1.5 stop outs, right? You got 2 of these, then that's the equivalent of 3 stop outs or 2 stop outs and the goal for the day. So you would have worked out just fine. That was the NQ this morning, okay? There's a lot of things that I want to show you in a little while here. Once I get into the live stream, I'm going to get into the live stream. Oh, I got to get the live stream started. Hold it. I haven't started the live stream yet. I still have 1 full minute to get that going. So let me get over here and get that ready to go. Go to community and live streams and go down to the bottom. I know I created it. Here it is. I can just click it and refresh it and turn it on. Okay, camera is off. Entire screen is on. Here we go. And I will start it right now. Perfect time. All right. So on the live stream, it's actually popping up these. Is it okay? That was just another marker. Okay, didn't actually pop it up. We have these alerts that are popping up right now, and I'll go into what these alerts are in just a few minutes. But one of the things that I wanted to go over here was looking at the bigger picture. Dwayne texted me a little while ago, and I had said earlier today that when prices were down here, it looked like they were bullish, going to get up into the MA1, into the black step line. On all of these markets, it was looking like they were going to get up into the MA1, into the black step line. And from there, it was looking bearish. It was looking like they were all going to fail off of that. And that is exactly what is happening right now. You see, we have failed off of the MA1 and the black step line all the way down into this weekly trading zone. And the same thing's happening over here with the NQ. And the Russell's not as easy to see, but it is doing the same thing. 100% retracing will be down here on the Russell. Okay. 100% retracement will be down there. And I think it's probably going to go down there and go through that. So the midpoint on the Russell's all the way down here. And the weekly trading zone is all the way down there. I think things are going to get buried here toward the end of the session. I don't, you could see it kind of coming this morning when it was coming up here to hit that. It was doing a 50% retracement of this big move down. That's what I was looking at this morning. A 50% retracement of the big move down was going to put us right up here into the MA1, into the black step line. And then I was thinking it was going to do a full move after that. So the way it looks right now, to me, where things are going to end up, this is the ES, okay? And using what information we have right now, let me take this piece right here. And this piece didn't just come out of nowhere, all right? Didn't just come out of nowhere. This is what you're looking at. That brings it right down here to this weekly trading zone, all the way down here, 51.44, 51.45. And that's by the end of the day. Okay. Now, Dwayne is going to go over all his stuff on a bigger time frame. If he hasn't already gone over this, he's going to go over this in much more detail, but that's by the end of the day right there. Okay. And that's the ES. The NQ is already on its way to doing that. Again, these leg lengths, they're from Wednesday's lesson plan. And I'm not just pulling this stuff out of the air. These are real things that repeat themselves over and over again. Okay. And this one, I'm grabbing it from the middle here, but you can take it all the way back over here and use it there. And you can take it all the way back over here and use it there. This is what you're looking at right here by the end of the day. Okay. Potentially all the way down here by the end of the day. Okay, we can go back and look at this on Monday. We'll go back and look at this on Monday. Now the Russell's not quite the same, but the ES and the NQ are just like that. The Russell's going to be a little bit different because it's already done 100% retracement. It's looking to move right down to here, and it's not really going to go much further than that, I don't think. But the ES and the NQ, they're pretty easy to see like that. And there was something else that we had been talking about in the past. Well, since Bitcoin started on this big run, I'll go to Bitcoin on a daily chart. Now, if you're just watching in the live stream and oh no, did I get rid of all the drawing objects on this? It looks like I did. This is a 30-minute. Okay, good, I didn't. All right, let's go to the daily chart. Okay, because here on the daily chart, I had drawn. I did get rid of all. Oh, I didn't. There it is. Okay. I had drawn this in here. Now, yesterday I had moved it over, like right there yesterday. And you can see right now it's gotten down into that. The Bitcoin has. It got down right down to that, and it's bouncing off of it. That is what I was looking for. We didn't get it exactly up to that level up there, but again, these levels we had said, when you couldn't look left and see anything on the upside, this information was here for us. It was in the market, and you just had to know how to look for it. And we were able to just stick all these things on here and say, okay, this is the next thing. This is what it should do next. And so now what should it do next? You want to see? It's pretty easy. That is what it should do next. Okay. So if we take this and we clone it, this is what we should see next on the Bitcoin. All right, we saw the pullback we were looking for. So if you take this and take that, and we'll clone that a couple of times. You see how it just sticks it up on top like that? So the first one goes down here, and the one before that was right over here somewhere. So in this gook. Might have been down here. Yeah, it was down here. That's where it was. It was like this. So the markets are doing what they always do. They're repeating the patterns. Okay? You just have to recognize the patterns. So that's what we're trying to spell out for you right here. This is the way it should work. Bitcoin, once it finally settles down here and starts moving back up, it should get up to here. And what's going to be the thing that moves it up there? Well, I mean, there's already notes being sold for more Bitcoin, like a lot more Bitcoin. So there's just a ton of opportunity out there in that. Oh, I know why this doesn't have yesterday's drawings on it, because it was on that one. This one will have yesterday's drawings on it, where I moved the stuff over already. It'll be in here. There it is right there. Oops, sorry, wrong one. There it is right there, where I moved that thing over yesterday. I moved this over yesterday, and you see it pulled right back down into it. And this is the level that it should get up to. And then if we do the same thing again, right here that I just did on that other chart, I won't go through the whole thing, but we'll just clone one of those and we'll stick it right there. And we'll clone one of these and we'll stick it up here at the top. Right, that's what that should do. Now I'm going to put that up here as a red target. Right, it should get up there and probably sell off of it. That's what should happen. Did I see the head and shoulders on the semi ETFs? Panic expected. I didn't. I will go take a look at that though. What is the symbol that you want me to look at on that? Okay. Alert buy condition met 665. So what I did in here this morning is, I'll show you what I did. Now this is all coming off of the TV trades. Okay, it's all coming off of the TV trades. And what that is over here, right here. All right, this was a buy alert coming off of, what was it? MINM? Minimum. MINM. And does it say a 1 minute chart? Okay. It's coming off of here on a 1 minute chart. What chart am I on right now? Okay, this is TV trade chart. Okay. So let me just do this and spread it out a little bit. No, this is not the TV trade chart. No, it is not. Okay, well, let me just throw TV trades on here because you don't really have to put anything on it. You can just put that on and minimize that and that. This was the Bitcoin chart, I think. You can see it gave the indication. Well, there was an indication over here. Why does it say 1 minute? Oh, it's a 7 range. That's what it says. It's a 7 range. Okay, this is what we're looking at here on the 7 range. Because I can just click on it and it'll tell me. But it gave the indication from right here. Now, the last indication it gave was over here. That was also earlier this morning at 10 o'clock. It gave another one in here. That was yesterday. Now, I just put this on here. I'll show you why I put it on here. But let me just look at the BMEA. It gave a long condition here a few minutes ago too, right in here. Now your stop would have been down below this level right here. You see your stop would have been here, 1777. But it gave some really good indications this morning, the BMEA. And I'll explain to you where we got that, okay? And all these other ones that I put on here were just things that I pulled off of. Let me show you. If you go out to our website, if you go out here to mytradingiq.com, here on mytradingiq.com, if you scroll down to right here, these are earnings for the week. All right, so what I did is I sorted by the technical rating in here. And I went and looked at the ones that are strong buys, that have some volume, that are at prices that people can afford to buy. A bunch of them. You can afford to buy 1,000 contract or 1,000 shares. And if it's got good volume on it, something like this one right here, the BMEA was one of them. There's pretty good volume on it. And you know, you might be able to go buy 500 or 100 or 1,000 shares, but the BMEA was priced here, you know, this morning is what I did. Now, I'm not suggesting that you go and day trade stocks. You got to meet certain criteria to day trade stocks, but I'm telling you that this is giving you great entry points on stocks that are strong buys. So, right, the BMEA gave you a couple of entry points today, and even today it's already moved up and giving you, this is Meta, but let me go to this one right here, or this one right here is the actual signal. Right, yeah. But you know, a week from now, this is a great entry point. I mean, today it's a great entry point. A week from now it's going to be an even better entry point, because these are strong stocks. So that's the value of having this tool. You get in at great entry points on stocks, like this information that you're able to get from here says it's a strong buy, but where is it a strong buy from? It doesn't exactly say, does it? It just says it's a strong buy. You just go out there and randomly buy it at whatever price it's at. You don't need a tool, the TV Trades tool, and it'll tell you when it's a good time for that strong buy. Give you the opportune time for that strong buy. And if it doesn't work out, it'll tell you right here how much stop you gotta have. All right. Like in this case, the stop was 12 cents. 12-cent stop on this. And the first target, well, it says what the risk reward is. So the first target was about 24 cents. The next target after that was about twice as much. So it gives you the risk reward too. Okay. I just wanted to where should you start as a beginner? A beginner on what? Do you want to trade futures? Do you want to trade stocks? What do you want to trade? I mean, what we have works with everything. What did I just minimize? I just minimized this, I think. Yeah, this. What we have works with everything. But Bri P, you gotta tell us. I'll show you where to go to get started. If you go here to mytradingiq.com, right up here on the home page. If you guys are watching in the live stream, mytradingiq.com, click on the purple button right here. There's no credit card required to get started, no credit card required for the trial. And for futures, we specialize in that. That is our thing. Click on this, we'll get you going. Okay, Brian. That's going to bring you to this page right here, registration page. And this is for all the next week. You just got to put in your first name, your last name, your email, your phone number down here at the bottom. Make sure you give us your TradingView login ID right here. I can see what it is right here, but you got to fill out this trial form, and then you'll be sent all the information you need to get into the room. Okay, you'll be sent a whole bunch of other information too, but that is where you should start. Absolutely. If you're a beginner and you want to get started, then you're better off actually starting with us as a beginner than having a whole bunch of baggage and learning a whole bunch of bad habits. Okay, so that is how you do it. You go here to mytradingiq.com, click on the free trial right here. No credit card required for it. And this is the form. That's all it is. There's no credit card in there. Okay. That's a great question. mytradingiq.com. All right. Let me minimize this and get back into the actual trading. Since you asked about trading, let's get into it. All right. So this right here, this blue arrow is the highest probability trade. The blue arrow right here on the NQ, highest probability trade. This one over here was still working. It's not really doing it over here on crude oil. Let me spread it out for you so you can see a little bit better. Spread it out, drag it down. Now this needs to put in a higher swing before we'll trade in that direction again. We don't have anything here on the ES, and we are almost in a trade setup here on the Russell. Okay. Now, one thing that you probably don't know, Bri P, is you probably don't know about range bars. You're probably not familiar with range bars, and we use them in the room in the morning, exclusively for trading futures in the room in the morning. Now, I can show you other things. I can show you how to use other things and how to use other tools that we have using other time frames. But for the short time frame, the short-term stuff that we do in the room in the morning, this is what we use. All right. And if you don't know, look at the buy condition on GBL. If you don't know, in here, this is our spreadsheet that we fill out at the end of every session in the morning. The spreadsheet goes back over 10 years. It's got our daily results going back over 10 years. Okay. I can't give you access to that in here, but if you sign up for the trial, then I can give you access to it. Okay, but in here I can't post anything that's got a link. Can't post anything that's got a link. I can't post anything that's got results or anything like that. I'm not allowed to do that. We don't want to break any rules. But the spreadsheet goes back over 10 years. Today we're at $455 with one contract in the room. Now, I worked my way up to 15 contracts starting last year. We have a thing called the 24/20 blueprint. And I started out in January of 2023 with one contract and added one contract per month, quitting when I got the goal for the day. Calculating the numbers if I quit when I got the goal for the day anyway. And so now it's 15 months. I'm on my 15th contract. And this morning with 15 contracts. After 26 minutes and 8 trades, I was up $1,500. Yesterday, 27 minutes and 9 trades, $3,000. The day before that, 11 minutes and 2 trades, $2,250. The day before that, 15 minutes, 8 trades, $1,575. The day before that, 13 minutes, 1 trade, $2,135. 8 minutes, 1 trade, $1,500. These results go back over 10 years daily. Okay. So sign up for the free trial. We just set up this weekend. Okay. You just set up today, so you'll have everything over the weekend. And you'll be sent all kinds of information. So right now I'm looking for the Russell to pull back down and test the ribbon. All right. We're in the oversold down here. We're in the oversold. So we're going to get some kind of an arrow when it pops out of the oversold. It'll either be a black arrow, a blue arrow, or a green arrow as it pops out of the oversold right now. Because we're in an uptrend. And that's what it's going to be. It'll probably be a black arrow. I don't think it's going to pull back deep enough. So what you do right here on this, in this particular instance, because these are range bars, I know the bottom of the bar is, so I know the top's going to be, this is going to be a blue arrow now. 57.7, if you add 8 ticks to that, now it's still going to be blue if it pops out of the oversold right now, it'll still be blue. But you add 8 ticks to the bottom, 57.6 up to 58.4. So I know ahead of time where this bar is going to close because these are range bars. Now it's gone down a little bit deeper. Now it's gone down a little bit deeper again. So now this number is going to be right here at 0.2. And now it'll be a green arrow. And now that number is going to be at 0.1. And it'll still be a green arrow if it pops out of the oversold. But it's 8 ticks from the bottom of the bar. I know exactly where the bar is going to close. It's going to close right here at 58.0. Okay. And there it is. And because I have 15 contracts on, it gave me slippage, but you see it did close right there at 58.0. I knew that ahead of time. And now it should, after 4 ticks in profit, we bump the stop to break even. Okay, so now my stop's to break even, and I'll lock in 1 tick right there. That was 15 contracts on that, $75, that 1 tick right there. I think. $65, $75, $75, I think. Yeah, that's $75. So that was $75 right there. But what it should do is get up above the prior swing high. It should get up above right here. Okay. And so we can't trade in that again. But did you see how all that came together? And you knew ahead of time. I knew ahead of time. Oops. You see how all that came together, and I knew ahead of time exactly where the bar was going to close. I was able to put the order on and be proactive, and I was able to trail my stop to break even. All those rules are right here. If you go to our website, mytradingiq.com, the trade rules are right here. Click on that. They're all right here. What I just did with that one was a long trade right here with the slingshot. These rules right here. Okay. And it's really just one sentence. With the slingshot, the black line and the ribbon must be on the bottom. It was. It must be in the green or the red. Or the, I'm sorry, in the green or the silver. And the lead line, the black line and the slingshot, must cross above the oversold. All that did happen. Okay. These two things right here you have to have for every trade. You have to be in a trend, and you have to have a lower or higher swing. Okay. And then down here, because it's a 7-tick range bar, the stop is automatically 10 ticks to begin with, and it goes to break even after 4 ticks in profit. It's always the same stuff. Always, always, always the same stuff. Right? So we're always doing the same thing again and again and again. See this one right here? The reason we trail our stop is because if it doesn't make it up to the prior swing high, then the trend is at the end. So we're not going to trail, and we're not going to chase it. We're not going to trade in that direction anymore until it continues the trend. So right now what you have is a rounding top. Okay. Right here you have a rounding top like this. Until it does something different, you have a rounding top. So you're not going to trade in this direction anymore. It doesn't make any sense to trade in that direction anymore. Wait until it proves itself in one direction or the other. It's got to go down and prove itself, or it's got to go up and prove itself. And it hasn't done either one yet. You see how this aqua color just came in right here? That's a no trade zone. No trade zone. Like this over here, you don't trade, you don't trade, you don't trade, you don't trade, and you don't trade. It's just there saying don't do anything right now. Wait until it proves itself. And it may end up going up right here. It may end up going up above the prior swing high. If it does get up above there and then it pulls back, that's great. That's okay. We're just not going to be any part of it anymore. We took a little bit of profit on that one trade, but we're not going to be any part of it anymore until it does do that. It's going to prove itself to us. Okay. this is coming from the TV trades. Along soon, you see I had set that alert. I think I set that a couple of days ago, that one right there. And if I go to that chart, I'm sorry, if I go, it's in here. If I click here and I go over here and I click on this, see this one, I need to put on the other things again. Delete the TV trades, put the other stuff back on there. This should be Bitcoin, not BMEA. Bitcoin on a daily. Bitcoin on a daily is what that should be. And this one is the one that should be BMEA. Again, this is stock stuff that was triggered this morning. And I just showed you guys how to go and find that. How to go and find that information. You get it off our website, the starting point off the website. Find out which ones you should be looking at. And then from there, you use the tool to find out where you should be entering on the ones you should be looking at. Okay. And I actually put something out on TradingView trades as well. If you go out here, this is not TradingView trades. If you go out here to TradingView trades, I did something for crypto in here too. If you're interested in the crypto, these are trending cryptos. So you can do the same thing in here. Look for the strong buys. Okay. Use this to give you the strong buys. And go in here and grab something that that you want to buy, that you think is worth buying. You can click on it if you don't know what the symbol is on it, and it'll bring it up over here. Complete symbol. It's Mask USD and it's on Coinbase. All right. So you have that information, Mask USD on Coinbase, and you can go back to your tool, in here, and do Mask USD on Coinbase right here. Oops, there it was right there. Mask USD on Coinbase, and it was a strong buy, so it hasn't given any indication to buy. Well, I guess it did. It just gave an indication here a little while ago to buy it right here. Now this is on the 7 range bar, but you probably don't want it on the 7 range bar. You probably want to do this on a bigger time frame, like a 5 minute or something. Nope, I guess 5 minutes not a really good one either. With these, you don't want to short, so you can take off the shorting criteria. You're really just looking at the long trades, so you want the target box, the target matrix to indicate the direction you should be looking in. And this is what it looks like on the 5 minute. It gave this long back here. Now, what did it? Mask USD. It didn't. I'm sorry, I didn't put an alert on it. I don't know exactly. If it doesn't have a lot of volume, then you got to put it on a range bar. And these range bars can take forever. It's like this bar is taking 40 minutes to get to the next bar so far. So if that's the case, you can put it on a smaller range bar, but then you're talking about smaller amounts of money, smaller increments. But the stuff still works. Okay. All right. That is a lot of information. Probably overwhelming everybody with all that stuff. Let's go back here and just look at futures again. It's now 1:24. I only have a few minutes left anyway. We want the Russell to pull back down, hit the ribbon. We see how we did get a higher swing here. So everything that I was saying a few minutes ago, all the stuff that I was saying a few minutes ago about this being a rounding top, and it needed to prove itself that it wasn't a rounding top, it just did that. It got up above the prior swing high right there. It just proved that it's not a rounding top and it's continuing the trend. So that's what it should do now. But you had to wait for it. You had to let the market do it. Okay. You had to let the market figure it out. Okay. Does that make sense? Now we're getting a pullback here. We're getting a pullback here and pullback here. This one over here, you're still in the no trade zone, but you see how we came out of the no trade zones on all these other markets. So we have potential trades on all those markets coming up. Okay. And it's now 1:25. We only have 5 minutes left in here. And you're getting these things that are saying possible long soon. So what that means, it's on a 5 minute chart. So you have 5 minutes to get ready for that trade. All right, and then you have another 5 minutes because the bar that's actually going to trigger the trade is 5 minutes too. So you have like 10 minutes from the time that that triggers to actually put the trade on. There's going to be no trade here. To get a trade, it's got to get into the ribbon or it's got to get into the order sold or both. The NQ is the closest thing we have to a trade right That is both right now. This will give us a green arrow. If we get it up close and pulls out of the oversold right now, in the NQ would be a green arrow. Okay, so it should be coming up right there. Green arrow. And here's the trade. Now with the NQ, the stop is 20 ticks away. 20 ticks away on the NQ because it's a 15 tick range bar. All right. So we're looking for this to move all the way up here to the prior swing high. You see it put in a target right here from before. It's got all these levels right here, these green lines. All right, that one just stopped me out. And that's no fun, but it happens. Now with this, if it would have gone 8 ticks into profit, I would have bought my stop to break even, but it did not. All right. So now you can see the indices are starting to roll a little bit right here. The ES hasn't pulled back to hit the ribbon yet. It's almost there. You can see how things are starting to roll a little bit here. And that's okay. Hitch, you didn't give me the symbol for that. Okay, I guess you're not there anymore. Probably. I don't know. Okay, oops, I don't mean to do that. I need to go here. Okay, let's look at it on the other one. I can put that right up here at the top. No, I don't know. Van, I was asking, can I just type that in here? Van. Oh, there's a whole bunch. Yeah, there's a whole bunch of VanEck right there. VanEck semiconductor ETF. Here it is. Ooh, there it was a second ago. Here it is right here on the NASDAQ. All right, SMH is what it is. All right, so this is what you wouldn't do this on a 4 range. Yeah, he's not saying what time frame, but I'm thinking this is a 30-minute right here. I think that's probably what he was looking at. All right, if we crunch this up a little bit, you see here's a shoulder, here's a head, and here's the other shoulder. So the neckline is right here on that. So it's right at the neckline. I didn't look at the daily. I just looked at the 30-minute. Yeah, I guess. Yep, here it is. Here's a head. Here's a shoulder. Here's another shoulder. It's kind of a weak neckline. I would say down here is where the actual shoulder is going to be. Down here, a little further down, and we'll see from there where it goes. But our last indication on this was all the way back here. Using this, our last indication from the daily was a buy back here on November 3rd. Yeah, last year, November 3rd was a buy on it. Yes. And the NQ. Right, I guess that's going to be it, guys. I'm going to wrap it up. So anybody that is watching in the live stream, if you have not taken a free trial with us and you want to, go here, sign up for the trial now. Go here. Where's it here? Go here to mytradingiq.com and sign up for the free trial right here. Click on the purple button. It's going to bring you to this registration page. We don't ask for any credit card information. Give us your TradingView login ID right here so we can set up your indicators for you and have them ready to go today. Okay. All right. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, and Studio A overlooking South Island, America's largest city park. Dwayne, if you are ready.
I am.
Okay, I'm going to stop the stream right now before I forget. Brian, sign up for the free trial if you haven't already. Okay.
Recap of the morning session.
Today, it took, I want to say 28 minutes and 8 trades, but let me just find out exactly. 26 minutes and 8 trades to get to $1,500 this morning.
Good job.
Thank you. Thank you.
Okay, guys, we have talked and talked. Now look what's happened since the beginning of the broadcast when we're talking about the daily chart. We've gotten below the 62% fib extension, which had served as support for quite a bit of the morning. Got a little bit of wick now. We're off the low of the day, but where's price logically trying to get to? Obviously, the daily BBC. Price always reverts to the mean. Here, 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 here. Now, since the last touch, February 21st, we haven't touched the BBC. So will we touch it today? Considering there's over $5 trillion in derivatives expiring today, I'll go out on a limb and say maybe. That's a pretty shaky limb when you can say maybe. But hey, I don't have crystal balls. I know that all these other people and places and companies try to convince you they do have crystal balls. Well, I got news for you. They don't. Okay? What they have is a snow globe, and you're in it, and every now and then they pick it up and shake it. Yeah. So, anyway, I suspect at the close today, we should be at the daily BBC or below. All right, let's say we do get below. Where's the next support? At the low of March 5th, which would be 51.40, 51.24 and a quarter. And we got the 50% fib extension, resistance on the way up, potential support on the way back down. And then we'll be looking at the 38% fib extension down at 50.15. And then the low of February 13th, 49.94. We've got this low right here at 49.35. And as we continue lower, now right here, I forgot to mention this. This one's really important because this is the 24% fib extension of the last leg up. Low was put in October 27th. The high was put in March 8th. Okay, so we're embracing that entire leg. The shallowest possible fib retracement is at 50.12, which is the 38% fib extension is 50.15. The low February 13th and 14th, the low of February 20th and 21st. I mean, there's so much congruence here. See, it was resistance on February 2nd and February 3rd. This is a major area to keep your eye on. Okay. Honestly, I believe price is going to go there. Now, not today, maybe not Sunday night, maybe not even next week. But I think eventually we're going to see a minimum of 47.37. Unless we put in a higher high prior to that, then that will move these numbers up. This number will never change down here. This is carved in stone. This was at the beginning of the leg up. Okay. So the only thing that can change is the high. And 1 week ago today, we put in a new all-time historic high. Yesterday, we came close, but we failed. Okay. This is the result of that failure. We're still sitting right on top of that 62% fib extension. So let's go to where the magic happens. The 30-minute chart. Call it the roadmap. It allows me to spot windows of opportunity in the marketplace. You'll learn how to do that too when you become a passport holder. Because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance. Over and over again and again. It's a never-ending cycle. It's been in place since the inception of the markets. It will remain in place until the markets cease to exist. Why? Because that's how markets work. How come nobody else tells you that? Because they got 1,000 different things to sell you. We got a passport. Okay? We're just honest with you from jump. So You don't have to open your inbox every day and find some new super secret discovery, and there's only 10 left, even though it's a digital product, Well, now there's 9. Come on. Why is there such a proliferation of scammers in the financial industry, training and teaching space? Because people keep falling for it and following the latest, greatest. There ain't nothing in the markets that's going to happen today that wasn't happening 50 years ago. Okay? The underlying fundamentals of how markets work are the same today as the day of the rice traders, the Japanese rice traders, who gave us, well, it was Fibonacci that gave us Fibonacci in the 14th century. Candlesticks were given to us by the rice traders, the Japanese rice traders, about 400 years ago. Now, a candlestick is simply a graphic representation of investor sentiment at a specific moment in time relative to the time frame being observed. Think about it, a graphic representation of investor sentiment. Now, we use a lot of range charts for executing trades, but on the 30-minute chart, I use the traditional candlestick. Okay, so the vertical line separates today, Friday, which began last night at 6 p.m. Eastern, right there. 10 minutes into the life of this candle is when the targets came out, CTAs that I showed you earlier. Okay, so 10 minutes into the life of this candle, we're below the BBC, so we anticipate lower prices. But we have blue and climbing, which represents support. So support took us up to resistance at the BBC. Then blue and climbing rolled over, turned to red and falling, and took us to the weekly zone, 5209/5210. Now, these are the zones that were published Monday morning, this past Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. Last night, you had plenty of room to get your goal for the day on the way to the CTA target. This candle opened at 52.19, ran all the way up to 52.30. It's about 21 points. You only need 2 points to get your goal for the day. You see, once price is above the BBC, you can see the step line, you can see blue and climbing. That's what I call the perfect stack. Swing high was 52.30.75. So we did not make it all the way to the target. In fact, price dropped below the BBC. So we're on our way to the zone. Remember, price is always trying to get to a zone. When it fails to do what it's trying to do, then it's going to roll over and do the opposite thing. When price drops to a zone, you expect support until proven otherwise. Price drops to a zone, you expect support, but otherwise. The zone is 5209/5210. These zones come out Monday morning, 6:15 a.m. Eastern. We've published on a weekly basis since December 14th, 2009, almost 15 years. 14 and a half. Okay, so this failure here, although you could get your goal for the day, this failure tells you to anticipate lower prices. So down we come through the zone. We hit the target. We overshoot the target. Now we could scroll back and define why price stopped there. But I want you to do that, okay? Because until you start doing it yourself, it's just going to be more noise that you've heard about the markets, like how they're going to run your stops and all that stuff, okay? When people can't accept responsibility for their own actions, they create urban myths to justify what happened. Well, I didn't have a chance. The 10 a.m. bulls, knocked me out of the park. Oh, that's just a lot of hogwash. Okay, price can do one of three things. It can go up, it can go down, it can go sideways. Sideways is called consolidation. After consolidation, price will either move up or move down. This zone is 5167/68. Where did the market find support today? At the zone. Is that unusual? No. It's what we expect until proven otherwise. Now the step line, the black line has, you see how coming down, you've got price, the step line, red and falling. Then the BBC. That's a perfect stack to the downside. But that step line has now crossed to the right side of red and falling. Okay, here's red and falling. Step line is on the left. Down here, there's the red step line, but there's red and falling, but where's the step line? It's now on the right side. You understand it? Left side, right side. Why is that even important? Because it's an indication that price is going to attempt to retrace to the BBC. Remember, price always reverts to the mean. And the pullback holds more often than not, whether you're pulling from below or above. But eventually, price will trade through. Keeps the markets fluid and tradable. So you've got two dynamics in play here. You've hit the zone, which you expect to be support till proven otherwise. Your step line has crossed. So price is going to attempt to rally up to the BBC, which we expect to be resistance until proven otherwise. If, for some reason, buyers suddenly get filled with conviction on triple witching day, with over 5 trillion hanging in the balance, well, stranger things have happened. You could still catch a trade at about 52.05 to 52.09. That would be 4 points. However, if the pull up to the BBC holds, as it does more often than not, that's when you anticipate another leg to the downside, taking you back to the weekly zone. On the Dow, here's where we open. We drop to support at blue and climbing. Now, this indicator is called the CFMA1, but I just refer to it as red and falling, blue and climbing. As you can see, when you have red and falling, price drops, blue and climbing, price rises. Okay, I just try to keep it simple. And again, at the beginning of the broadcast, I talked about the BBC bull-bear cross. When price crosses below the green line, then we're bearish, anticipating lower prices. When price crosses above the green line, we're bullish, anticipating higher prices relative to whatever time frame we're looking at. So what stopped price from getting to the zone? We had a nice little rally going here, right? Perfect stack, price, step line, blue and climbing. But we stopped short. 39,426. $39,427. We came within 1 point of taking out this. See, when this candle opened yesterday, we're in a falling market. But when this 30-minute candle opened, it was green for a minute. And then it collapsed. And look where it found support. At the zone to the tick. Buyers came in, rallied it up. Resistance at the step line. We sent it back down and actually through the weekly zone. Okay. But as we went into the close, we had a rally, and we went sideways. This was this little green candle here. It was the final candle yesterday. This was the opening candle last night, and it's 10 minutes into the life of that candle that the CTA targets came out. So we failed to make it to the zone because we ran into resistance created yesterday. Price rolls over, blue and climbing becomes red and falling. Price drops all the way to the zone, overshoots it, retraces all the way back to the BBC. Now this is the 9:30 candle, this is the 10 a.m. candle. The 9:30 candle will typically be the biggest candle of the session, except on days like FOMC day. From 9:30 to 10 a.m., I do no business. I don't put out any alerts, don't do any trading. For me, the markets are too volatile. Michael thrives on volatility. Okay, you've got to figure out where you fit in that spectrum and then make your own personal preference. If there's 10 a.m. news coming out, then I wait till about 10:15, 10:20. Because I don't want to get caught up in knee-jerk reactions from economic reports, which when the dust settles, half the time or more, price is right back where it was before the report came out, and it created an unusual candle. Okay, so we find resistance at red and falling. We don't make it all the way to the BBC. That's a sign of weakness right there. So you could have traded this right back down to the zone. When the market finds support, it will go look for resistance. Found it at red and falling. That took us down through the zone. And that took us all the way down to the short target. We caught a little bounce at the short target. This was a green candle, but it quickly failed. Became a red candle, leaving a wick in its wake, and it dropped to the zone where it found support. Zones are an area just like fibs. They print an exact price point on your chart, both fibs and the weekly zones, but they are an area. Okay? It's important to remember. So, where's the most logical place for price to go right now? Well, we're well below the BBC. We got red and falling. We got the perfect stack, price, step line, red and falling. So, I suspect price is going to return to the zone. Now, the question is, will the zone hold? It held here. But each moment in the market is unique. So if price does manage to trade through the zone, then you got to make sure you get below this low before you start working with this area. And then you got to look over here to see what previously happened that will become possibly potential support. That would be your previous swing lows, previous bullish crosses, etc. Okay? See how we're coming down to the zone? This is not rocket science, it's logic. And the more you employ it, the logic just becomes common sense. Does that mean you're going to be right every time? Get that adrenaline rush? That dopamine bursts? No. And the Logic 247 channel is over 16,200 individual handcrafted trend trade alerts. But as I told you at the beginning of the broadcast, and I tell you every day, what we've averaged over the last, I think it's 293 weeks now, 20% or less of the alerts do get stopped out based on market structure A simple process we teach all of our passport holders. So your best work, your best analysis, you're still going to get stopped out. There is no pinnacle that you'll ever reach where you laughingly look back at your young days as a trader when you got stopped out a lot, and now you never get stopped out. That world, there may be some alternate universe where that exists, but in the world in which you and I live, it doesn't exist. Professional traders don't waste time or treasure chasing some fictitious holy grail. They understand getting stomped out is as much a part of trading as breathing is a part of life. They get stopped out, big deal. They simply look for the next opportunity and take advantage of it. What do new traders do? They get stopped out, and then they see a beautiful setup. They're afraid to take it. And it works out beautifully. And then price retraces and gives another beautiful setup. They're still afraid to take it. And it works out beautifully. Then it retraces again, providing another beautiful setup. Well, doggone it, I'm not going to miss this one. And that's the one that doesn't hold. Now the conspiracy theories start. I'm cursed. My office is bugged. They're running my stops. No, they're not. They could care less about your 1 contract or your 10 contracts. ES trades a couple million contracts a day. Nobody's out to get you except the noise between your ears. My friend Mark Douglas, in his book, Trading in the Zone, wrote that the answer to the markets is not on the chart. It's in your mind. When you become a passport holder, we will hook you up with a free copy, a legal free copy of Trading in the Zone, where Mark's wife still gets her royalty. Unlike Goldman Sachs, who just photocopies the book and hands it out to all the new hires, and she doesn't get a dime. Did you know that they only have, on average, 2 to 3 losing trading days a year? And it's so incestuous how people move from these executive positions at places like GS and end up in the Treasury or at the Federal Reserve, and vice versa, if you're one of the chosen. All right, let's go to the Russell. Russell opened trapped between resistance overhead, support below. We rolled sideways. Red and falling turned to blue and climbing. So we got a little move here. Didn't take us all the way to the zone. See, we would have to get above the zone and these highs before we could even think about trading to the long target. But this candle here opened at 2061.8 and ran up to 2066.1. I mean, this one candle here had almost 3 points in it. This one took us all the way up to 2066. About 5 points. 3 to 5 points on this move, even though we didn't get to the zone. Okay. Now, why did price stop climbing? You know what I'm going to say. Look left. Then price comes back to the BBC, trades through it, and every now and then you'll catch an oddity like this. In other words, there'll be times when price does not do the next high probability thing, and there's nothing you can do to change that. There's no indicator, no oscillator, no algorithm, not nothing, not no way, not no how. It's going to change that fact. That's why after 16,200 individual alerts, 20% or less get stopped out because somebody at the table, one of the big dogs, changes his mind, gets heartburn, needs to go to the bathroom, pulls a massive order, or comes back from a 3-martini lunch, sits down, his head spinning, and he places some massively large order. And so the whole market turns out of the blue for no practical reason. As you strive to become a good technical analyst, got to understand that even your best work is not going to prevent you from being stopped out. Of course, you want to minimize the number of stop outs to the best of your ability. But you can't let it ruin your day when it happens. It's just the truth about trading. So we ran up to the zone, published Monday morning. Couldn't get through it. Pulled back to the BBC, made another run, creating a head and shoulders. Head, shoulder, shoulder. We're not really pattern recognition people. But you could draw your neckline across here if you were someone wanting to do that. I would just simply tell you, you need to let price get below this low, down about 2046. Then you got a nice 5-point potential down to the short target. As far as the long side, I really don't have a lot of interest there because we've got potential resistance right there, and right there. I need at least 2 points of room to run in order to take a trade. And nothing to the upside here gives me that unless we get above the zone and get above that high right there. Then this would be golden up here. I mean, something along the lines of, I call it 2075 and 2085. It's 10 points. $500 per contract traded. If you followed the blueprint and earned the right to trade 10 contracts, then it would be a $5,000 move. In Q, here's where we opened last night. We started heading down. Buyers stepped in. They had other ideas. But when you had price, step line, red and falling, could you have got your goal for the day? Well, this candle opened at 33.5 and dropped to 205. So 25 points, give or take. You only need 5 points to get your goal for the day. The NQ pays $20 a point. Then red and falling turns to blue and climbing. Price closes above the BBC. This candle opens and closes above the BBC. This candle opens at 264, makes a run all the way to 322. It's about a $1,200 per contract move. However, you got to be aware of this swing high that could be potential resistance. Okay? And that was the little hiccup right here, why we closed off the high of the session. Then you got another one here, another one here. Then price drops below the BBC, blue and climbing becomes red and falling, and we make a fast drop to the target. Now remember, only 3 things happen at a weekly trading zone. 70% of the time is consolidation, 20% of the time is rejection, 10% of the time is the slice. That's when on the 30-minute chart, prices slices through the zone like it's not even there. But when it runs out of steam, it will typically retrace back to the zone it sliced through and then continue the direction of the slice, just like it did. Look left, you'll find out why price stopped here. Support sends the market looking for resistance at the zone. The same zone that was support yesterday became resistance today. And what do we do? Drop to the zone. The zone's 1801/1802. Low of this candle is 1806. So we missed it by a few ticks. But the step line crossed. So what does that tell us? Price is going to attempt to retrace to the BBC. The pullback holds more often than not, so that should open the door for a potential move to the downside this afternoon. If we overcome the BBC, you've got to look left and see these lows, potential resistance. This bearish cross is potential resistance. And of course, this swing high is potential resistance. But for reasons already discussed multiple times during this broadcast, I will be surprised if price closes higher. Let's go back and look at our daily chart for a minute. Yep, we're off the low of the day. We're still sitting right on that 62% Fib extension. All right, we covered the NQ. So we go to crude oil. Crude oil. A lot of sideways. We're above, we're below. Okay. So on this move below, could you have gotten your goal for the day? Sure. Now this low, buyers came in early before we hit that support level by a few ticks. Ran it up to the BBC, which became resistance. Sent us back down. And we ran up, ran down. When you have price behaving like that in such an erratic manner, go find a different market. Or go do something else and come back. Remember, you only need one good trade a day. Here, get back above the BBC. We make a decent attempt at the long target. Market falls short. High is 81.45. Now, keep in mind, crude's been climbing heavily for 3 days. This is Friday, this is Thursday, this is Wednesday. On Wednesday, we not only had inventories, which showed a draw of 1.5 million barrels, but a Ukrainian drone hit a Russian refinery. And the result you're looking at, higher prices on crude. The fact that we failed to put in a higher high just tells me crude's kind of taking a breather today. Doesn't mean you can't get in there and get your goal. I mean, this candle here, you've got everything telling you to go short. This candle opens at 80.83 and drops to 80.60, we'll call it. $230 per contract traded. Gold. Here's where we opened last night. Flat and sideways. We get above the BBC, this candle, 66.6 up to 70. That's about $300 per contract traded in that one candle. But over here you have a better picture. You've got price, step line, blue and climbing. This candle opens. This candle opens at 2168.2. It goes to 73.4. It's $1,100 per contract traded. Got it again. Opened at 68. Oh, I'm sorry, I did the math wrong. From 68 to 73, 5 points. $500 per contract traded. So we get a leg, we get a retracement to the BBC, the pullback holds, and that sends us all the way to the target at 2176. And if you look over here, you'll see that bearish cross. Whenever you have a bearish cross that leads to an extended move, the first time price revisits the area of the bearish cross, it will almost always be good resistance. And it was. See it? Bearish cross. Red line gets below green line. So after we hit the long target, we get below the BBC. Got red and falling. Lots of room to get your goal for the day here, down to the zone where the market found support. Support sends a market looking for resistance, BBC. Resistance sends a market looking for support at the zone. The zone support sends us looking for resistance at the BBC. Resistance has now sent the market looking for support. We've gotten below the weekly trading zone, printing a green candle. You gotta let price get below this swing low because that's potential support. Okay. And so 2158 to 2157, go for the day. Silver, just rocking it all week. Big week for silver. Here's where we opened last night, right at the zone. We had blue and climbing. That took us above the BBC. Took us all the way to the target. This candle, you got the perfect stack. Price, step line, blue and climbing. Okay, we opened 2509. Ran up 7 points to the target. That's $350 per contract traded. Now we overshot this bearish cross by just a little bit, but look what happened. Price folded quick. Where to find support? At the BBC. So we get a big leg and a retracement. Pullback held to the BBC. Another leg, another retracement, another leg, another retracement, another leg, another retracement. This is the highest weekly trading zone this week for silver. 2565/66. The high of the week is exactly 2566. We've again pulled back to the BBC, but we have an obstacle overhead. Step line. If we get above the step line, the next obstacle will be red and falling. If we get above red and falling, then the next obstacle will be 25.62 half, the high of that candle right there. Trading is not easy. It can be simple. Just don't let all that nonsense out there distract you from what should be your primary goal, the thing that you're hyper focused on, learning how to trade. Not looking for some trick, some gadget, some widget, whatever. Just learn how price flows, read the chart, and instinctively know what the next high probability move is. And when you get really good at that, 20% of the time you're going to be wrong. It's not you being wrong, really. In fact, you shouldn't think of it as being wrong. It's simply the market did not do the next high probability thing. That happens about 20% of the time. At least it has over the last 16,200 plus alerts. Logic alerts. These are the CTAs. Showed you the logic earlier. Here's where we opened. Down we came to the zone. But we consolidated for hours. Remember, 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, the slice. See, this was a red candle all the way down. It sliced through the zone like it wasn't even there. But when it ran out of steam, what did it do? It retraced to the zone it sliced through, and then it continued in the direction of the slice, all the way to that zone. Needless to say, how we closed today, and all that stuff we talked about expiring today being triple witching day, okay? There's a whole lot of people looking at their watch every 30 seconds. How much more time do I have? You know, Friday afternoons are typically pretty quiet. But because it's triple witching ahead of the FOMC next week, the final hour of trading today could become extremely active, volatile. So be prepared. That's all. And be careful. To become a member, go to mytradingiq.com. If you have questions, you can call us at 949-42-EMINI, or you can send a text to 949-423-6464. That's what these letters represent. That's a 3. You know, on your telephone, on your keypad, you've got letters associated with the number. 949-42-EMINI is actually 949-423-6464. Getting that number wasn't easy, but we've had it for years, a lot of years. And always you can send an email to support@cfrn.net. These are the statistics. 9 out of 10 new traders fail because they don't have a teacher. You wouldn't dream of becoming anything, really, as far as a career goes, without getting proper training. In fact, you would want the best training. If you're going to be an attorney, you want to go to Harvard Law School. You may not get accepted, but that's probably where you would like to go if you could get in, right? But people look at trading in a different way. Oh, I just put a couple grand in an account I'm in business. Now I'll just click the mouse and make some money. And then after a few blown up accounts, people get discouraged and decide it's all rigged, all a scam, and they live out the rest of their days trapped in a false belief. What a shame. To become a trader, you don't have to pass a test. You don't have to be licensed. And that's why 9 out of 10 new traders don't make it. If you don't hire us, hire somebody you can trust. Somebody that's been around a while. Somebody that has plans to continue to be around a while. Someone that will give you one-on-one personal attention. We give you 2 hours of group training every day in an interactive trading environment. Live trading and live markets while you trade along in your demo account to learn the strategy and ask lots and lots of questions. After about 2 weeks, you're out of questions. Our strategy is that simple. You go to ask a question and you go, whoops, I already asked that. And I already know the answer to that. And a question you asked today was probably asked 5 years ago and will probably be asked 5 years from now. The answer is going to be the same. Because the underlying principles that our strategy and indicators are built on are the same underlying principles that markets operate on. That just makes so much sense, doesn't it? When you become a passport holder, along with having access to the live training room every day and around-the-clock support on Telegram, you also have access to one-on-one private mentoring, strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. As a passport holder, you'll receive the weekly trading zones each week. You'll get the Logic 247 alerts, the concierge trade alerts. You'll be able to attend the members only workshop every Thursday night. And you'll get the key that opens all the private channels in Telegram that when you're on the trial, you don't have access to, but you still have access to the discussion group and other channels. The Logic 247 trial channel, you've got access to that. The CTAs, you get those during your trial. And again, there's no credit card required for the trial. We want you to be able to make a well-informed and intelligent decision before you become a member without having to spend a dime. We foot the bill. When you take a trial, it's not free. We pay for it with our time, with our energy, with our resources. You can go here to take a trial, or you can go here, become a member, and get started with the business of learning how to trade. Remember, once you learn how to trade, nobody can ever take that away from you. And when you know how to trade, you can trade anything, anywhere, anytime. It's been a great week. Let's wrap it up with our good word for today. And we started yesterday with praying God's promises, part 1. Let's go to part 2. Jeremiah 33:3. Call to me, and I will answer you. Stephen Furtick preached a great sermon this past Sunday about Jeremiah and about the condition Jeremiah found himself in and how he got rescued. It's quite amazing. So if you missed Elevation Church last Sunday, good news is you can go to their website and you can watch a video of last week's sermon. It really was good. Do that and watch the movie I mentioned, Come Church. Now, I'm not trying to change your theology, okay? But this movie is based on a true story. This really did happen. The people portrayed in the movie are real people. Martin Sheen's in it. Somebody else, the big names in it, I forget. It's on Netflix, so if you have Netflix, all you got to do is just go to the search, Come Church. Okay? And if you happen to have grown up in the South and are familiar with gospel music, and this all took place right around the time the AIDS crisis was cresting. Boy, there's just so much woven into that. Now, don't think that the bishop portrayed in the movie that I'm siding with him or that I've changed the way I think. No. But it is going to give you food for thought. And it is going to take you to a place, hopefully a quiet place, where you and the Father will talk about what it is you actually believe. Something like 70% of the people in America, if you ask them are they a Christian, they'll answer yes. If you then ask them when's the last time you went to church, you get a blank stare. Easter, Christmas. Which, by the way, Easter's coming up. And even if you're a Christian and you go to church every week or twice a week, or if you're in the South, 3-4 times a week. Anyway. I'm telling you up front, it's going to challenge what you believe. And I'm not trying to sway how you believe, and I haven't changed how I believe. But it has sent me into some quiet time and prayer and reading of Scripture. Because even though you may consider yourself a believer, do you know what you really believe? And why do you believe it? Because your grandmother told you to believe it? Because some pastor in a pulpit told you to believe it? Or because you've spent quiet time with God and He's spoken to your heart? That's what all your beliefs should hang on, right there. God's Word, His written Word, and the Word He speaks to your heart. Now, half of you are going to go watch it this weekend and you're going to be all mad Monday. You're a heretic. No, I'm not. I just want you to be as well informed and well educated as you can. And again, this is history. Some of you know who Oral Roberts was. Some of you don't. Those who do, some of you loved him. Some of you thought he was a heretic. Hey, I'm not here to point fingers, call names, put labels on people. But if you love God, I think it's worth watching. All right, let's go. When you begin to pray scripturally based prayers, you will get the answers you need. Here's why. The Bible is God's Word, and He always keeps His word. Here's how to pray. Well, when you don't have the answer, that's a good time. Jeremiah 33:3. Call to me and I will answer you and show you great and mighty things which you do not know. When's another good time to pray? When you're worried and under stress. John 14:27. Peace I leave with you, my peace I give to you. Not as the world gives, do I give to you. Let not your heart be troubled, neither let it be afraid. Or perhaps when you need spiritual insight. John 16:13. When he, the Spirit of truth, has come, he will guide you into all truth. For he will not speak of his own authority, but whatever he hears, he will speak, and he will tell you things to come. Number 4, when you need power for service. John 14:12 through 14. He who believes in me, the works that I do, he will do also. And greater works than these he will do, because I go to my Father. And whatever you ask in my name, that I will do, that the Father may be glorified in the Son. If you ask anything in my name, I will do it. Now there's a caveat that goes with that scripture. Okay? What do we pray when we pray the Lord's Prayer? Thy will be done. Okay? If you're praying for something outside of God's will for your life, guess what? It's probably not going to happen. But when you pray the will of the Father, you got a promise right there from Jesus himself. And last, number 5. Pray when you need God's blessing in your endeavors. Ezekiel 34:26. I will make them and the places around my hill a blessing, and I will cause showers to come down in their season. There shall be showers of blessing, as it just now began to gently rain here in Phoenix, Arizona. Friends, once you see the results of praying God's promises, you'll never want to pray any other way. That's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.